Paul, welcome. Good to have you with us. What do you say? Can those growth tech names make progress as interest rates inexorably move higher? The typical thinking has been that that's going to be an impediment to them.
That's definitely going to be an impediment to them, but you hit the nail on the head. It's not what happens today or tomorrow. It happens 6 to 9 months out. And if we do see peak inflation, which wouldn't necessarily lead to peak interest rates, but it would be a good sign, that should bring some relief to tech and aggressive growth names.
Is it thus then a time to wait, or is it a time where you can start safely to nibble at some names, maybe some of the safer, bigger mega cap tech names that might not be quite so volatile, if that is your want?
I think you can begin to nibble. And you're right. If you take a look at the FAANGs, I think it's always an opportunity when they're weak to buy, particularly Microsoft, Apple, and Google. I think the business models at the rest of the FAANG group may have changed somewhat, so I'm more skeptical. But then there's also an opportunity to jump on some new themes, or maybe not particularly new themes, but themes of this age rather than yesteryear. If you take a look at some of the infrastructure software companies, particularly those names that are focused on cybersecurity, companies like Palo Alto Networks and Fortinet, you might have some opportunities, even though they're not particularly large cap, and they might fly under most tech investors' radar.
And even a name like Box, you think is one that fits this environment, Paul? Why?
Yeah, so Box and the other two that I mentioned are laser beam focused on cloud management and cybersecurity. And I don't want to say regardless of valuations, because that would be a dumb comment. Valuations are always at least somewhat important. These are enduring themes. These are accelerating themes in these very odd geopolitical conditions. So I think they'll do well.
So you have those names for infrastructure software, which are kind of a hiding place right now. You think a lot of the names like Apple could be relatively safe, Google, Microsoft. What about Broadcom?
I do like Broadcom because Broadcom is a hybrid. It's part semiconductor company and it's supremely well managed. They have a good handle on their supply chain. And so they've been able to weather the COVID supply chain clog. And they're also, at least partially, an infrastructure software company. And they pay a very lush dividend, which is rare in the tech sector. So I think that one is probably also good to buy. Broadcom, ticker symbol AVGO.
And just to put a button on it, tell us why, again, you think, names like these infrastructure plays are a place that investors can seek out in tech right now.
Yes, again, they're not necessarily value plays, but cybersecurity, red hot, has only come more into the fore in recent weeks and months, as we all know. And then also with Box, here's a company that helps you manage your cloud applications. And even though Amazon Web Services and Amazon came into that infrastructure cloud market back in 2006, it's been some time, we still are relatively embryonic, believe it or not, as far as the market share with cloud versus traditional hardware and software. And so if you can embrace that theme, I still think there's many years ahead of it, and it's going to be a lot of dollars, trillions of dollars in market cap created.
Shepard Smith here. Thanks for watching CNBC on YouTube.